if you're able, for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Carol, could you take roll call, please?
Here.
Here.
Here. Amy Weiss Thomas. President Russell. Present.
Do we have any public comment? Or did anyone, sorry, Carol, did anyone sign up in advance for public comment? No. Okay. Next is the president's update. The Retirement Board for Allegheny County's Working Group on Plan Funding and Modernization issued its final report July 16th, 2026. This week, our consultant, Sarah Emmons, in the front row, is in town. We had preliminary briefings with some members of labor, an additional briefing with county council, this morning with department directors, and this afternoon, some folks at the airport authority. So those are all of my updates. Next item we have are board approvals. Oh, could you, I think your mic's off.
Thank you. There's a motion to approve the board meeting minutes for the June 18th, 2026 board meeting. Motion.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye.
Aye.
Any opposed or abstaining? Motion passes.
The motion to accept the financial statements, which include the pension fund assets, the statement of changes in plan net assets, and the RBAC balance sheet for May and June 2026.
Motion.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes.
There's a motion to approve the August invoices totaling $448,000, I'm sorry, $448,337.90.
Motion. Okay. Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes. The next we have retirement applications.
There's a motion to ratify the following July 2026 applications. The attached applications have been filed with the Retirement Office for pension approval by the board. There are 6 early voluntary and 14 full retirement. Motion. Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye.
Aye.
Any opposed or abstaining? Motion passes.
There's a motion to approve the following August 2026 applications. The attached applications have been filed with the Retirement Office for pension approval by the board. There are 9 early voluntary, 18 full retirement, 1 disability, and 2 pension payment plans. I'd like to say that under the payment plan, 1 is for a new payment plan and 1 is for an extension.
Can I have a motion?
Make that motion.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes. The next we will have report from Carol Uminski, our retirement assistant manager.
Thank you. If you turn to the Directors tab, I'll highlight a few areas on the dashboard. Retiree payroll is slightly over $13 million this month. The year-to-date is up 4.35% from last year. Total contributions are up 9.78%. Contribution refunds remain high as per this time last year at 81.53%, which has been recognized in the last few dashboard reports. I reviewed the contribution refund dashboards over the last 12 months, pinpointing when the trend spiked upwards. The prior 7 months since February, refunds have increased on average by 112.65%, whereas September 2025 through January 2026, the year-to-date average was negative 0.88%. Moving to the number of refunds, over the same period since February, we have seen an average increase of 28.53%, whereas the average from September 2025 through January 2026 was negative 61.63%. On average, over the last 12 months, the number of refunds have increased by 11.6%, whereas the average volume of refunds paid has increased by 63.82%. It has been noted by staff that payouts are increasing for longer employed and vested members of the plan, which support these percentages.
Thank you.
If you go down to the bottom of the page, membership is listed out by active, payees, and deferred vested members. On the next page, total retirements are down 1.3% from last year, with 192 year-to-date. Pension estimates continue to be popular among our members. They are up 46.2% over last year, with office estimates up 8.9% and online portal use up by 51.55%. Moving to the middle of the page, capital calls are listed as of the last meeting, totaling $317,463.02. And lastly, the operating budget is listed as of July 31st, 2026. Are there any questions on the dashboard?
No, but before you give your board approval items, could I give a little preamble?
Sure.
Okay, yeah. Next, we're going to have a motion about authorizing SME consulting for additional work. And that's Sarah Emmons, who led our working group project. So we see the need for her expertise to continue to bring stakeholders up to speed, produce additional materials and scenarios, and respond to follow-up questions, and assist with moving forward steps. So in the spirit of that work, we have the upcoming motion.
Okay. So you will find that motion behind the director's report. And the motion is to authorize a second amendment to the SME agreement, providing for continued services upon request in support of implementation of the working group's recommendations at the hourly rate of $250 plus reimbursable expenses. Monthly bills may not exceed $10,000, and the term of the amended contract is extended by 12 months to July 31st, 2027.
Can I have a motion to authorize that second amendment?
I'll make that motion.
Second.
Hearing a motion and a second, is there any discussion?
So for clarification, it's may not exceed 10,000 a month up to 12 months. Is that a not to exceed amount of 120,000 for the whole contract?
Yeah. Are there any further questions or discussion? Hearing none, all in favor? Aye.
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 Any opposed or abstaining? The motion passes.
All right, there's just a couple of board updates. First, the approved annual report was sent to the printer and was mailed on July 10th, 2026. And lastly, a dashboard is included in the report for January through June 2026 education, which includes individual conversations. The numbers are reported by our contracted provider, Duncan Financial Group. Please note that due to some scheduling difficulties, technical glitches, and temporary staff limitations over the last few months, you'll see that the education sessions were reduced for this period. We do plan to ramp them back up for the second half of the year.
Thank you. Are there any questions? Thank you, Carol.
Thank you.
Next, we have our solicitor's update from Brian Gabriel.
Thank you, Erica. In addition to the other parts of the solicitor's report, there are 3 recommended motions under the solicitor's agenda. For point of reference, all are addressed at pages 2 and 3 of the solicitor's report. And so the first one deals with a request for consent for a 2-year extension on the Adams Street 2008 Direct Fund LP. And so this is a scenario the board's familiar with. This is a limited partnership agreement that's set to expire or supposed to expire next month. The general partner is asking for a 2-year extension. Mariner has recommended against consenting to that extension. The solicitor agrees with that recommendation. We don't control the outcome, of course. There are many other limited partners, but that is the motion that's being recommended to be considered and approved.
Do I have a motion to reject the requested consent to a 2-year extension of the Adams Street 2008 Direct Fund LP?
Make that motion.
Second?
Hearing a motion in 2 seconds. Is there any discussion? All in favor? Aye. Any opposed or abstaining? Motion passes.
The second action item is a recommendation of a 5-year contract with the incumbent Duncan Financial Services. This is the product of an RFP process where the incumbent bid on it. There was one other bid, and there was a review, submission of an analysis of that to the board and past reports, and this is the motion that comes from that with the proposed 5-year agreement.
Can I have a motion authorizing a 5-year contract with Duncan Financial Services with effective date January 1st, 2027 through December 31st, 2031, billed quarterly at $12,000 for 2027 and 2028, $12,500 for 2029, $13,000 for 2030, and $13,500 for 2031.
Motion?
Second.
Hearing a motion and a second, is there any discussion?
Are they well attended, these seminars? I know I just mentioned that you kind of didn't have any recently because of staffing issues, et cetera, but are they well attended? Are we getting good feedback from the employees that they're helpful?
The employees that we reach are very pleased with the service that they get. One of the things that Duncan provides to us that we haven't seen with any other financial team is the level of personal interaction. It goes beyond just doing a seminar or passing some information. They work with a person one-on-one. If it takes 15 meetings or 20 meetings, they're there to do that, and there's no charge for that. So we've had wonderful feedback from the people that we are reaching. They are well attended, but you can always do better, and we continue to strive to find different ways to reach more people.
Oh, yes.
Could you let us know how employees that may be tuning in could access the calendar of events that's provided by this consultant? I know I get emails whenever there's a seminar that's available, but where would folks go outside of looking through their inbox?
We would like to put the calendar of events on our website. We haven't done that to date. We do have a schedule. It gets changed a bit, so that's why we're hesitant to do that, but we would like to, and we will. We do the HR blast, and then we do individual meetings. So Denitra will go out to the Canes, we'll go out to the police, the airport, and we're always letting people know that, we have others coming up. We find that if we can work with somebody at a management level, it helps. So that would really be beneficial if we could get to that level.
And so is that around coordinating with individual departments?
Yes, there are a lot of departments that they will schedule these during the workday and urge people to attend. There are other departments that say, this is on your own time, this is your lunch break, this is after work.
Okay.
Okay, thank you.
Are there any other questions? Seeing none, all in favor? Aye.
Aye.
Any opposed or abstaining? Motion passes.
The final action item is also the product of an RFP process. This is for a proposed 5-year agreement with Phase 14. who is the incumbent in providing medical services for disability application reviews, examinations that have to take place under the statute in order for the board to make a decision, and then, at least on occasion, re-examination of disabled retirees. So this is a proposal for a 5-year agreement.
Great. Can I have a motion authorizing a 5-year agreement with Phase 14 effective January 1st, 2027 that includes a board option to extend for 2 additional 1-year terms on the same terms and condition, subject to final review and edits by the solicitor to the agreement. Fees include a monthly intake process of $1,800 for year 2027, $1,900 for 2028, $2,000 for 2029, $2,100 for 2030, and $2,200 for 2031. Physician fees for each applicant are $2,800 for 2027, $2,900 for 2028, $3,000 for 2029, $3,100 for 2030, and $3,200 for 2031. Disability review fees are $2,500 per case. Additional medical review for disability reevaluation is subject to physician fees. Is there such a motion?
I make that motion.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? The motion passes.
I have no other recommended motions. I'd be happy to answer any questions from the board.
I don't see any, thank you.
Thank you.
Next, we have our consultants from Mariner. Just one consultant from Mariner today, Chris Brokaw. And I'll let you take the floor.
Thank you. Tim is somewhere on the turnpike, stuck in rain and traffic. So apologies.
Send our regards.
On his part. So if you turn to the last tab in the book labeled Mariner Reports, at the beginning there's a two-page memo, and it addresses the recommendations and the requests for motions that are on the agenda on page 3. So the first item, and this is on page 1, the first item is liquidation and termination of the Bailey Gifford International Equity Portfolio. A number of items here that I'll go through regarding the investment and the rationale for the liquidation. The portfolio right now, as of June 30th, is $17.7 million. It's one of 4 different international equity investments that you have in the portfolio. The fee for it was 61 basis points, or 0.61%, which is higher than the average fee of the other investments in the portfolio. For example, 2 of the other similar investments investing in developed markets are State Street, which is an index fund. It's 7 basis points, and FIAM, Fidelity Investment Asset Management, is 31 basis points. So it was slightly higher. So eliminating them from the portfolio will bring down the overall average fee for the international equity allocation. The performance has been volatile over its history. For example, in 2019 and 2020, well, 2019, they outperformed their benchmark by 11%, and in 2020 by 16%. So they have a good long-term track record. It's just been erratic, and since that period, and especially over the last 5 years, they have underperformed their benchmark. The exception over the last 5 years is in 2023, when they did outperform, but not enough to make up for their underperformance in past years. Over this time period, we have, because we've needed liquidity in the portfolio, we have in 2020, 21, 23, 25, and 26, liquidated portions of the portfolio to supply liquidity to the plan, and those liquidations totaled $72 million. So we've already taken significant amount of the capital away from Bailey Gifford. Going forward, again, you have 3 other managers. We believe that those 3 managers will provide the correct exposure to international equity markets going forward. So getting rid of one of the managers and not replacing it, we don't see that as a negative, but actually a positive. Now, with the proceeds, and I'll when I go through the investment report, I'll point to a page with the asset allocation. With the proceeds, we're recommending investing that $17.7 million in the Federated Core Broad Market Fixed Income portfolio. So from an asset allocation standpoint, you have less fixed income than the target allocation, and this will increase that allocation to fixed income. So that's the summary that I have for Bailey Gifford. Before I talk about the other rebalancing item, I'd be happy to answer any questions on that.
Okay, do we have a motion to terminate and liquidate Bailey Gifford International and use the proceeds to fund Federated Broad Market Fixed Income? Estimated value as of June 30, 2026 is $17.6 million.
Make that motion.
Hearing a motion in a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes.
The second item is on the following page, page 2 of 2. And it's really about rebalancing the portfolio and also generating liquidity for future distributions from the portfolio. On an ongoing basis, the portfolio requires approximately $6 million in cash net, cash outflows each month. And so we've been taking assets from the portions of the portfolio that are over their target and allocating those for those cash outflows. The infrastructure is semi-liquid, is the term that we would use. So when you put in a request, if the board were to approve these items, if you put in the request, you don't receive the cash until January. So it's kind of a forward-looking process to make sure that there's liquidity in the portfolio months from now. So these investments are overweight their target a few percentage points. Selling $6 million from JP Morgan, $7 million from IFM will bring them back towards the target allocations. They have returns that have met their benchmarks over time, 10.9 and 9.8% in the 2 funds over the last 3 years. So they are performing as expected. Again, this is more of a liquidity issue rather than a performance-related issue, and also, again, rebalancing. So that's the recommendation, $6 million from JP Morgan, $7 million from IFM.
Thank you. Do we have a motion to sell $6 million JP Morgan infrastructure and $7 million IFM infrastructure?
Make that motion.
Hearing a motion in a second, is there any discussion? Yes.
So this is just for clarification because
Yeah.
it's a very obvious question. So you're selling 17.7 million Bailey Gifford, and logic would generally say you would just use that money to use the funding. But what you're saying is because of the lack of balance within the policy, it's better to reinvest the Bailey Gifford into an underweighted area and take money out of here because they're overweighted.
Yes, and this recommendation, the cash from IFM and JP Morgan won't come into the portfolio until January of 2027. And each month, again, it's about $6 million that the portfolio needs.
Okay.
In a moment, I'm going to talk to you about the current asset allocation, and maybe that will, build out an even larger answer to the question of where's cash in the portfolio, where are the other assets relative to their targets.
Yeah. Thank you. I just wanted to clarify that. Thank you.
Thank you. Any other questions or discussion? Seeing none, all in favor? Aye.
Aye.
Any opposed or abstaining? Motion passes.
Thank you. If you turn to page 12 in the report, page 12 shows the asset allocation as of June 30th. And just a reminder, the bars are, when you look at the chart, the gray bars are the investment policy statement ranges, and the black line in the middle is the target. So in terms of the liquid investments in the portfolio, the U.S. equity is more or less right on the target. International, slightly behind. Again, I'm making that recommendation to sell Bailey Gifford for performance-related reasons. At the same time, if you look at the next line, the core bond is still a bit below even the minimum for its target allocation. If you recall, the investment policy changes that the board approved at the end of 2025 increased the core fixed income from its 14.5 target to 18.5, and we have been adding to that position to build it up towards its new target over time. The 17 million from Bailey Gifford will incrementally move that allocation forward. High yield is right at the bottom of its target range, and then in the next categories you have some illiquid investments. Now, real estate is near its target allocation. Infrastructure is a bit over its allocation. So again, the recommendation is to try to get in front of the cash needs in the portfolio and make that $13 million rebalancing recommendation today. The funds won't be in the portfolio until January. The cash is slightly above its targeted range. We were already doing some rebalancing, and at the end of the quarter, there was some cash in the account that hadn't been moved to its ultimate destination. And then I'll also remind you, I've been talking about $6 million as the net distribution from the portfolio. The gross distribution on a monthly basis is about $13 or $14 million. So $28 million sounds like a lot, but every month towards the end of the month, there's $13 million coming out. So that's a comment on the cash. And private equity is another allocation that has been reduced over time. The target, it's above its current target allocation, but I would remind you that the prior target was 20%, and the board approved lowering the target allocation. Additionally, that part of your portfolio, the private equity portion, has been distributing capital every year for the last 6 years, and in fact, it's a total of $101 million since 2020. More recently, This past quarter, it was $2 million of a net flow coming into the retirement fund, and year-to-date, $4.8 million. So that portion of the portfolio is decreasing over time as the distributions are made. Wanted to make that comment because it is over its target allocation, but number one, the target allocation has come down considerably, and number two, there's continuous cash flows coming out of that portion of the portfolio. The other page that I wanted to draw your attention to is page 28, which is the performance. And when you look at the recent performance at the top line for the quarter, the portfolio was up 7%, and for the year-to-date, 7.6%. The latest quarter was really a significant recovery from the first quarter, the end of the first quarter, the month of March, significant equity market declines after the beginning of the war with Iran. But you can see in the quarter, U.S. equity, 3 lines down, 3 rows down, was up almost 19.5% for the quarter. So a significant recovery there, and that's really what drove the overall performance in the portfolio. Maybe just another item, and this is really looking shorter term. There's the 1 month that you see in there, and it's also a more generalized comment. The portfolio tends to perform relative to the benchmark a bit higher when the market's negative. So you see in the month of June, it was up 0.5% when its target was essentially 0. So that's an item that I wanted to point out to the board. Those are my prepared comments. I'd be happy to answer any questions.
I think you did a good job.
I see no questions. Thank
I
you.
think you did a good job.
Thank you. Oh, did you? Sorry. Yeah.
So I know for us, you always create a couple pages that show our fund managers and what the current status is. I think maybe it was 2 meetings ago, I had asked around whether it was possible to get an aggregate of how much we pay in management fees per category. So,
Yes.
Our U.S. equity, we know how much is in there, but what percentage of that is going towards management fees?
Yes.
And like seeing that in the aggregate. Is that anywhere in the report at this moment? And is it possible for that to appear in future reports?
Yes. So there's a lot of pages in the report.
Like 130?
And some of them are for posterity, for history. They go manager by manager. So if you page through a lot of pages, page 136, or I should say pages 136 through 139 address management fees.
Great, thank you.
Can I ask a follow-up on that, please? So does this include any fee that would come, so there's, I guess, 2 types of fees in the product that we don't see before the fee that we get charged, right?
Yeah, that's a great
So I just
question.
wanted to
Thank you.
Does this address just the ones that we get directly charged?
Sure. So if you're on page 136, I can just, hopefully in a brief comment, show you that it's capturing both of those fees. So on page 136, the State Street, the first line item there, the S&P 500, is a fund. And oftentimes, fund expenses are charged through the fund, so you might not see a bill. You know, the retirement office might not actually pay a bill, but you're paying something through the fund, and that's what it's capturing there. With an account like Twin Capital, that's a separately managed account, you would receive a bill from them. So in both cases, that estimated annual fee, and it says estimated because most fees are based on the asset value of the portfolio. So we're looking at the contracted rate and applying it to the current portfolio value. And that logic that I laid out applies to the rest of the managers that you see here.
Would it be possible for Mariner to do a calculation that shows, so this is showing the fees as dollars and basis points or percentages of each specific asset. Can you calculate it a blended amount so we could see, like, domestic equity, we're paying, I don't know, 32 basis points?
Great, yeah. So show the blended rate by the asset class.
Yeah.
Yeah.
And also the blended rate for the overall investments, excluding the private equity.
Can I ask one more question?
Yes.
So there's a couple on here that say minimum fee. Can you
Yes.
address that?
Is your mic on?
Yeah, 139.
139.
They're the iNetworks primarily.
Right. That would be in the contract. So those would be the contractual stipulations when you made the investment with them. So some managers may have, some service providers may have a minimum fee stated in the contract when you contract with them. So in this case, you see that for two of the managers. Or actually, it's one manager, two different funds.
And do those fees have are they for a certain number of years, or are they for the whole life of the contract?
They are the contract, and I can follow up with the very specific contract here. Unfortunately, I have copies readily available.
Okay, yeah, if you could follow up.
And I will follow up, but I can tell you that generally speaking, and I believe for this manager as well, after a certain period of time, the original contract is for 10 years, and then there are two one-year extensions that don't need the board approval. They're at the discretion of the investment manager. So let's call it 12 years, and then when you see 0 for the estimated annual fee on some of these managers, it's not that you signed a contract many years ago at 0. It's that they've reached the point where they're 12 years into the contract. You've paid fees over that time period, and they're in the latter stages of winding down the fund, and then they no longer charge a fee. So that's a more generic question. Very specifically, I will follow up on the minimum fee for those two investments.
Thank you. Anything else? Thank you, Chris.
Thank you.
Next, under new business, we are forming the contribution subcommittee to meet with Acrisure. We're targeting that meeting to occur before our September 26th board meeting. And very generously, Member Liptak will be the chair. Thank you. Sarah Roca will be on the committee, and Amy Wise Clements will also be on the committee. I have nothing else. Is there any other items by any members? Seeing none, can I have a motion to adjourn?
Make that motion.
We have a motion. Second? We're adjourning. Have a great day.